Hi guys, welcome back. Market Video Analytics. Every Tuesday, I'm Cuzin giving you top-level market analytics powered by Light Forex Broker. Today, we're gonna have a super interesting session, guys, because I'm following up on a session that I've published about a month ago. The title was "Negative Sentiment is Escalating." That was done at the 23rd of October, just a month ago, and I'm going to leave the link to that particular session in the description so you can easily access that link, that video session. But I was suggesting that we're going to have some downside movements, not only on the S&P 500, which is just the main representative of the stock market, but effectively speaking, all of Wall Street and the rest of the stock markets. And I was also putting my money where my mouth was, and I established a bearish position aiming at very particular key level 2,612. Let's see what happened ever since that session, and reanalyze the situation. I'm going to share with you my conclusions with regards to the near future. But first, I want to show you the actual picture of how things looked about a month ago. Let's go ahead and take a look. So this is the session itself, right? You can see the title right here, S&P 500 negative sentiment is escalating, and that was done at the 23rd of October. Right, about a month and 4 days ago. Take a look at where price was. Price was at 2,730. It's a bit blurry, but I think you can get it. Now, what really led me to establish a bearish position at that point was the fact that price was spiking here at that mid-high key level 27.95. Right, just showing you kind of the basic. This was the trigger, and here it is, right? A month and 4 days ago. Let me just enlarge the situation. So what you've seen, what I've just shown you, was exactly at this point right here. This is where we were. Right after price was spiking here, that same key level, 27.95, and I was aiming at 26.12. Take a look. That same key level still here. Now, I have to be honest, this one really exceeded my expectations. I wasn't planning to take such a huge profit in a matter of a few days. Take a look what happened. Price engaged straight with my key level, which is the mid-low key level of the symmetric setup here, very important one. Grabbed my price target and I was out. Now, a few days later, let's take a look at, I'm just going to take you to the daily chart. So later on, price began to move upwards. You know, I wasn't surprised. I knew that the 26.12 is a very strong key level, the one that can completely break the negative momentum. And I was sitting on the sideline. I wasn't ready to flip over. Really wasn't ready for it. And I'll tell you why. Because the previous lows were still untouched, right? I mean, no doubt, the 26.12 is a strong support, but judging the high that we came from, take a look at the high that we came from. It actually did take the previous high by a pretty large margin, I would say, both in time and price. So usually, and when I say usually, I mean about 80% of the cases, when price reverses, it does the same with the previous lows. So I was actually expecting price to continue, break below 26.12, and squeeze the rest of the move all the way to the previous major low around 25.30. But I wasn't ready to establish a position. You know, generally speaking, whenever I establish a bearish position on the stock market, namely, you know, the S&P 500 or the Dow Jones, I always make sure to be extra careful. So what I usually do is I open 50% of my usual position size on the way down, because the downside moves are could be very sudden. they could be very elusive, right? So I'm also taking extra cautious with regards to price targets. So at 26.12 I was out, but I kept an eye on the situation because I had a feeling I was going to go back in. I needed a strong technical situation that would trigger a second round on the way down here. And here's what happened. Price went straight up to that very same level it broke before, the 27.95. This is a very important key level. This is the mid-high key level, right? It got broken at first. That was the first moment that I was so interested in this whole situation when I noticed that on the weekly bar there was a very decisive close well below 27.95. And just to reconfirm, this bearish conviction, what price did was just went straight up the following week, touched base again, left this really impressive spike, and bounced back below that level, just to show you the sheer power of the resistance here, right? So the same key level got touched the second time, this time coming from below after touching the mid-low key level. And when I noticed that reaction, I knew this is priceless, right? This is priceless. Price just spiked that level, came back, closed below, and began to reverse again. At that point, I knew I have the second round pretty much guaranteed. So I'm still in this position, but I think that we should expect. I mean, I've just told you I expect price to hit the 25.30 and take the previous low, because if you think about it, right? I mean, no doubt, the S&P 500 and also the Dow Jones are very similar, and they both present a very sound technical picture, really strong technical picture, which I was able to pinpoint with my symmetric setup here, right? So basically what you're looking at here is just a pretty wide trading range that had started roughly at the beginning of 2018, because up until the beginning of 2018, the market was up. It was one direction, up, up, up. And only at the beginning of 2018, price began to consolidate, right? That's what we call, the official terminology for a trading range. It's consolidation. When you have, for the very first time, price begins to trade sideways rather than upwards or downwards. So we had, the first leg followed by the second leg touching base here with the same mid-high key level, and then another leg, which basically I suspect is one leg, by the way. I think, it's just a three-part one leg. So we had the first leg on the way down, then followed by the second leg, right, that took the previous high. And we're basically still right in the middle of the third leg. I don't think that move is over yet. I think it will take the previous low, right, even deep further downwards, but not below the bottom key level, 24.48, and only then begin to reverse to a potentially, next bullish move, right? The next bullish leg in this case should be the fourth leg, right? We have already three legs. Should be the fourth leg, taking us back to the higher section. So for those of you who don't take short positions on the indices, on the stock market, you probably want to wait for price to dip a little bit further. Now, the next battle is definitely going to be against the 26.12 again, right? We saw how formidable support it was just a few weeks ago. So I suspect we're going to have an engagement pretty soon with that level, but this time I also suspect it's going to be successful. It's going to break the 26.12, reach the 25.30, take the previous low, and only then begin to bottom out and possibly reverse. Now, I want to show you the Dow Jones. Basically, this is my favorite technical picture at the moment. I actually prefer the Dow Jones over the S&P 500. It's more, it's clearer to me. It's clearer because it involves a second setup, which comes from the shorter time perspective. we got the big setup, right? We got the big setup, which is very similar. Take a look at how similar the big picture is right here. The Dow Jones. You can see the big setup is the black one, right? The black system here. Take a look at how similar it is to this S&P 500 when I get them to the same resolution, right? Very, very similar. Same legs, by the way. Right here on the Dow Jones also. Take a look. First leg, second leg, third leg. Very, very similar. Also, both trading in the middle range of their big setup. But here we have a second system, the blue one, which we don't have in the S&P 500. And here's what I'm learning when I look at this closely, and I think this is priceless, guys. This is the main reason I believe we're going to continue to move downwards, much more than what I've just shown you in the S&P 500, mostly because of this blue system you see here, which reflects the shorter term perspective, right? Because we have a lower scale sideways movement trading range, right? And in order to observe that fully, you need to switch to the daily chart. Let's take a look at that. However, you have to remember, the daily chart is very noisy, so you should expect incidents like these. Take a look. Prices breaking out, right? Seemingly breaking out, even closing out outside of that system. So we had the first leg here, followed by the second leg, which was pretty violent, right? Very noisy. But this is excess noise, guys. This is not genuine stuff. I was able to filter that out later on with the weekly close. I'm going to show you that in a minute. And it kept disrespecting, the blue system from the daily perspective when it did close yet again outside, but this time above the top key level. But so we had 2 legs, 3 legs, and then we had the 4th leg, which was also maybe, right, just violating the system. But here's where the difference is. Take a look at these previous 2 occasions where it seemingly violated the system. I'm going to take you to the weekly chart now. Take a look how it looks like from this perspective when you filter out the noise. So that was the violation on the downside, beautiful 2 spikes, and that was the violation on the upside, another really interesting spike, all of which, right, kept price inside the system eventually. This is the important part to understand. And what I said, here's where the difference is. You can actually see it, it's very clear. This time we had a close decisively below the bottom key level 2467, and on top of that, you can actually see how price just came back to retest that level, this time from below, and you can see how this level is right there blocking it from continuing to move upwards. This is maybe, from a short-term perspective, this is actually a very good spot to pick up, if you haven't got already, right, a bearish position on the Dow Jones, which can reflect, by the way, to the rest of the stock market, right? Because if the Dow Jones is on the downside, you can pick pretty much every stock. It's going to go down. That's a simple fact. But right now, when I look at the Dow Jones, it's just so informative, right? Gives us such a clear picture of what seems to be a slight upside correction to what's already is a downside move, which happens to be the 3rd leg in this trading range. But the 3rd leg hasn't completed its, mission, if you will. Its mission is, in this case, is to hit the 23,957. So here's the difference, by the way. Interesting, because if you take a look at the S&P 500, for example, then you can clearly see that it actually did reach the lower section. It was right about 4 weeks ago, right, at 2612. This is the mid-low key level. However, the Dow Jones did not. It actually missed it, right? That, believe it or not, actually reinforced my bearish conviction because we have a move that hadn't completed yet officially on the Dow Jones. It would only be so once it hits the 23,957 here. You can clearly see the key level right there. So I actually allowed myself to put one more portion in my bearish position as it hit the 24,667 here, which we know is a strong key level. We saw what it did here, right? And I think we have a breakdown of the local, price action, resuming the bigger picture move on the downside. And here, just as I told you, just as I expressed on the S&P 500, I expect price to go and chase the very previous major low. Take a look, 23,100 right here. Now it also took the previous major high, right? When it was up on its way up, it took the previous high. It wasn't a big cross like we saw on the S&P 500, but still it did take the previous high, so it should do the same on the way down, and only then maybe begin to reverse for the next upside leg that should take us back again to the upper section. So we might have a few waves that we can surf here. I've definitely started with this one, the third leg, which is the first one to actually take advantage of. The fourth leg should be even better, but this is only considering that we will have a sound upside reversal that we would be able to rely on, and that only happens once the previous major low is taken, right? So there's lots to look forward to. It's really fascinating to see how things are going to unfold here. I will be here to keep you posted. So we'll see you in the next session, of course. Till then, be well.